Hi, I'm Drew Pettit, Director of U.S. Equity Strategy at Citi, and this is Taking Stock.
Got the club going up on a Tuesday, and by club, of course, I mean the S&P 500. The tail of the tape we are expected into the close here for this Tuesday, December 2nd, is a positive one, at least for most of the major market indexes. But just in the last couple of minutes here, in anticipation of the closing bell, we are seeing a little bit of downward pressure on the small caps. The Russell 2000 looks like it will finish just in negative territory. And how about the gains for the S&P 500? Up about 0.25% or so on the day, even though it had been in negative territory earlier on today. Tech, industrials, telecom, those are your leaders today for the S&P 500. 6 of the 7 magnificent 7 tech stocks in positive territory. A little bit of downward pressure on Tesla. Apple, the big winner of the bunch, up about 1.1%. That and much more sets the stage for today's show. And welcome to it, one and all. You're watching Taking Stock. I'm your host here at the New York Stock Exchange, J.D. Durkin, just mere moments away from the ringing of the iconic closing bell, which we do every day. Let's keep the party rolling for at least one more day. Out of the Dow 30, Boeing, Caterpillar, Honeywell, those are your big gainers. How about this? Caterpillar continues to be the strongest performing name in the Dow Jones Industrial Average here in 2025. I don't know many people who had that on their bingo card. Coca-Cola, Procter & Gamble, and Chevron leading losses to the downside. The team from United Way here at the New York Stock Exchange, alongside Chris Taylor, they are set here to do the honors for a positive day for the markets, a little bit of mixed territory. We'll pick up the broadcast right after the bell. United Way here at the New York Stock Exchange. That's what I'm talking about. When you got the gavel on the sounding block, hit it with authority, hit it like you mean it, bringing about a close to the trading session. Final tail of the tape, the S&P 500 up 0.25%, the Dow up about 0.4, NYSE Composite Index down 0.07%, with the small caps, like we said, down about 0.1% as well. Now let's bring in the great Phil Rosen, co-founder of Opening Bell Daily, here for what I just heard. Breaking news is unfortunately his final broadcast with us here in 2025.
Oh, don't tell me that, JD, no.
Thank you for being here, my man. It's great to have you as always. Give me your sense on the markets here, general price action. It doesn't feel like it, but we're still only about 1.5% off of these all-time highs, despite a lot of chop and a lot of volatility here the last couple weeks.
Yeah, it's been choppy, but we are within a couple points of all-time highs. And to me, when we're entering December at this level, that's a very good sign, because when we're coming into December, year-to-date positive, coming out of November, I believe it's 13 out of 13 times in a first year of an election or of a presidential cycle that stocks are positive in December.
Wow.
So things are looking pretty good right now. And I think we're about to get 2 catalysts from the Fed that will also be very bullish for stocks. So the first thing, the Fed is probably going to cut rates next week. And when they're cutting without a recession, stocks are higher 100% of the time a year later. And when they're cutting when stocks are 2% or less within record highs, stocks are also 100% of the time higher a year from now. So I think we're in pretty good shape.
Whiz kid. See, I have to do handwritten notes to remember the stuff. Phil Rosen goes right off the dome. Talk to me a bit more about seasonality. This is historically the second strongest performing month of the year for equities. The S&P 500 averages a return of 1.4%. What else is on your radar here for the final trading weeks of 2025?
You know, I saw a great stat from our friend Ryan Dietrich. He said that in the last 45 years, I think it was 45 years, there's only been 2 back-to-back negative Decembers ever, or in 45 years.
Wow.
And we had a negative December last year, so this year we could see the third time in 45 years, or we could see what we typically get, which is not a back-to-back negative year. So again, there's a lot of reasons to be bullish right now for going into 2026.
Yeah, so the bull case for December remains strong there. Talk to me a bit more about Fed considerations. Jay Woods and I have talked many times, a good friend of both of ours here, about the fact that the FOMC right now, it's kind of split. You got your cut camp, your hold camp, the we'll kind of wait and see camp right now, but a lot of pressure on the Fed, given the fact that both sides of its dual mandate, they're kind of in conflict with one another right now, at least a little bit.
Yeah, so we're going to get this new Fed chair coming in potentially announce any day, and he's going to be more dovish than Powell. So that's going to bring rates lower next year, and it's going to make policymakers ignore inflation more than we've seen in the last year. So that's something that will be good for asset prices. Who knows what that means for the rest of the economy, but investors will do very well, is my prediction. And the thing that I'm watching, if it is Kevin Hassett, who is the leader on prediction markets for the successor, he has ties to Coinbase, which I don't know if anyone's really talking about, because his interest, or at least history with Coinbase, what does that even mean when we have the most powerful monetary policy institution in the world with ties to Bitcoin, cryptocurrency, the most popular crypto exchange in the world? That's probably pretty good for crypto investors.
Yeah.
So that is something to watch.
Yeah, Kevin Hassett's been a longtime economic advisor of President Trump, both in Trump 1.0 and Trump 2.0. Obviously, you'd expect him, if he is the pick, to come in with a bit more of a dovish stance overall with regards to monetary policy. Before I let you go, holiday outlook for consumers. We talk a lot about soft data versus hard data. They say one thing. They tend to spend money in a bit more of a robust way, especially for the holiday season.
Yeah, I think the Black Friday shopping to Cyber Monday was historic. It was one of the best readings we've ever seen. Millions and millions of dollars people are spending. And that is totally counter to the K-shaped economy narrative that we've been hearing about for several years now, because you would think most Americans are actually not spending money, they're pulling back, and all the discretionary spending is reserved for upper income households. But it seemed like there was pretty broad spending in the last week. So I don't really know what that means, but there seems to be sort of a narrative violation that we've seen with this boom in Black Friday shopping, and yet we still have a lot of pain for everyday Americans.
Yeah, of course. Maybe if you're a lot of people still out there, though, on the sidelines have not done any of their holiday shopping. I put myself in that category. I did not take advantage of the Cyber Monday deals, but that's all right. Still got a few weeks left to go. The great Phil Rosen, co-founder of Opening Bell Daily, kicking off the broadcast. Thanks for being here as always.
Thank you for having me.
Josh, going to grab your mic. Todd, my man, you and I are going to head for a walk this way, and we're going to talk about an earnings watch for one of the key names reporting today after the bell. That is AEO, American Eagle Outfitters. We are expecting earnings per share for 43 cents a share on the revenue side, $1.32 billion. The stock, a little bit of downward pressure for AEO today, but coming off of 7 consecutive winning sessions in the run-up to earnings. And how about the last time the company reported earnings? Knocked the cover off the ball, up 35% 3 months ago after reporting for the corner. Tariffs, a huge storyline for the stock. We'll watch closely in the next hour or so. Shares of AEO traded up 23% so far here in 2025. Todd, we'll take a look here quickly at 2 NYSE notables, and we'll start with the biggest name by market cap here at the New York Stock Exchange. That's, of course, Taiwan Semi, up about almost 2%, 1.5%, still 6% off of its all-time high. We had a big story reported earlier today that Intel is set to supply chips to Apple, which in theory could threaten Taiwan Semi's dominance. Investors shaking off those concerns. Taiwan Semi shares up 48% from January 2nd. The average one-year price target on TSM sits at $354 a share. That's upside potential of another 21%. And finally, Todd, we'll take a look at shares at the best name in the S&P 500 today. Boeing shares soaring 10%. The CFO forecasting higher 737 and 787 jet deliveries next year, still off its 52-week high by about 18%. Shares of Boeing are up 14% from the start of 2025. The New York Stock Exchange's very own Ashley Mastronardi sat down with President and CEO George Nichols of the American College of Financial Services to discuss all of the ways that their new public educational campaign has come together. Take a look.
The American College of Financial Services wants you to work with a designated financial advisor. They are in New York launching a national campaign starting with a Times Square billboard to help educate families about working with these financial professionals. Joining me to share more is the American College's president, George Nichols. George, welcome to the New York Stock Exchange.
Ashley, thank you for having me. This is so exciting to be here with you today.
Can you tell me more about the American College and this campaign? I know it's the first time you've done something like this.
Yes. Well, the American College of Financial Services is almost 100 years old. And this is the first time we've ever done a consumer campaign that's focused on this specialist and these specialists too. And really what you think about is Americans are aging. Their situations are getting more complex as you look at the uncertainty in the economy. And we're wanting to promote that in order to meet consumers' financial needs, we need specialists that focus on taxes or retirement or estate planning or special needs. So that's really what this campaign is about.
Are there people that aren't designated who are giving out financial advice? And what potentially could be a consequence of working with someone who doesn't have a specific expertise?
Well, the first thing is for an advisor, they got to be licensed, whether that's insurance or securities license. So they have to get licensed first. Otherwise, they're not going to be in the business. So you at least have that part. But what we have found, and research has shown it, that those people who've gotten and invested in education to be designated as specialists or to get more advanced training, they are going to provide better advice to their clients. And remember, these decisions could affect you 30 to 40 years from now. So it's really important that they have the knowledge. And we've actually done outside research. We had an independent firm that came and looked at us and said, if you have a designation from the American College, you're 35% more likely to retain your clients. You're 13% to increase your earnings, and you're 5% at being a whole lot more productive. So when you think about those things, that's really what this campaign is promoting, so that people know that's the kind of folks I want to look for.
When looking for an advisor, how can you find out if someone has the specific license and designation that they need to help with a particular area?
Well, that's a great question, and that's part of the other challenge is you have an advisor that says, oh, I specialize in all these things. No one knows whether or not that's true. But we are launching a new website called youradvisorguide.com. And on that site, if you're looking for a retirement specialist, we're going to make sure that the only people listed on that is someone who's a retirement specialist or estate planning or special needs or philanthropy. So we're actually creating a website for consumers across the country that can go in and validate that the specialty that I need, that advisors had actual training and advanced education in that designation versus someone who just says, well, I'm really good at these things, which you may or may not know.
Your research shows a strong link between credentials and advisor performance. Can you share more about that?
The first thing I always say is that if you are more knowledgeable, you're probably going to be more confident. And we found that our advisors are more confident, and that if they've had one designation with us, they actually are operating at a much higher level than advisors who don't have a designation. And we've actually been able to prove that based on their overall production. We've also been able to show that they had 2 designations from the college that really focuses on this specialization, that they're doing even better than someone with 1. So we have outside independent research that says you want to work with an advisor who has a designation, who's invested in their education. They're going to be more confident, they're going to be more competent, and that you're going to find they're going to be actually better at giving you the right advice that's really critical for your financial security.
All right, George Nichols, president of the American College of Financial Services. Thank you so much for joining us at the New York Stock Exchange.
Thank you for having me, Ashley.
Let's do it, one and all. Welcome back to the broadcast. You're watching Taking Stock here from the trading floor of the New York Stock Exchange. We'll get you quickly updated on how some of the biggest names in cryptocurrency traded on the day. Don't call it a comeback. Bitcoin, Ethereum, Solana, all up big. Bitcoin up 5.5, reclaiming at least briefly earlier today the 92,000 level for the first time since Friday. ETH up 6.5, Solana up 9.5, the big winner on the day. At this point of the broadcast, say hello to our next guest. This is Dale Smothers, friend of the show, president and CEO of RDS Wealth. My man, thank you for being here as always.
Good to be here, JD.
We still got to start with the undisputed king of the, maybe it's not undisputed anymore. We'll talk NVIDIA. What's on your radar for NVDA these days?
A little bit of a battle there between OpenAI, which would be in NVIDIA, and Google, right? So this idea that there has to be a deciding factor between, are you in Team NVIDIA and OpenAI, or are you Team Google? I don't think that that's actually what we should be considering right now. This is not as much an AI race as it may be a game of AI leapfrog. Clearly Google has taken the lead, but I think NVIDIA right now is a perfect opportunity to buy a good name that is on its way back. It's only 25 times earnings, JD. I think NVIDIA is the play here with AI. I would lead off with NVIDIA, but I can't complete this without even talking about something like CoreWeave. I like CoreWeave right now. CoreWeave is a great place to put some money. Long term, you're going to have a ton of volatility, but CoreWeave is a powerful place, and one name in AI that absolutely takes what we would consider possibility and turning it into profit right now, that is none other than Palantir. You know, you got a lot of these names right now that are taking hype and wanting headlines and hoping their stock gets bid up. Palantir is becoming the operating system of the world in AI. I think it's a good place to put some money.
Yeah, you mentioned NVIDIA, of course. NVIDIA, the second best performer of the Mag 7 so far here year to date, up about 36% or so on the year. I know you like the cruise stocks, which is interesting. I haven't spoken to someone who's been covering names like Royal Caribbean. What's on your radar there as we round out Q4?
Yeah, a lot of our clients are looking for stability, a little bit of income clearly from Royal Caribbean. I think you've got upside potential. It's been sold off. We're in a cycle right now of travel. It's a high travel cycle in the country. I think Royal Caribbean benefits from that specifically. Not only do you have a good solid dividend, but you got good upside potential in its price action as well.
Yeah, shares of Royal Caribbean up 14% on the year, and you're speaking my language, man. It's a brutal day weather-wise here in New York. I'm eyeing some of those cruise
Rather be on a boat, that's right.
Yeah, you're not kidding. All right, let me ask you about silver. We covered it on the show yesterday, reaching a fresh all-time highs. Overall, precious metals somewhat taking a breather in today's session, but we've had this incredible run-up. What a narrative over both gold and especially silver on a week like today. What are you tracking there?
Like both metals, JD, both metals, but here specifically silver. Silver not only has this defensive mechanism about it because it's an actual commodity that has pretty stable price action. It has upward trajectory like we haven't seen. I think a lot of this has to do with lowering interest rates. As interest rates lower, money comes off the sidelines looking for a good place to go to work. Silver, gold, a good benefit there. Here's another one. Technology needs silver. The conductivity of silver is second to none. I think there's even a demand from the technology perspective, which is why we're heavy on silver at this point, and clearly the price action shows we've been right.
Yeah, absolutely. At the start of every broadcast, I try and bring our viewers the updated, kind of what's going on with the 11 sectors in the S&P 500, what are the strongest, what are the weakest. Year to date, how about XLU, utilities, the third strongest performer out of all the 11. What are you seeing for utilities, which right now is up 15% on the year?
Here's another, what could be defensive, also has a good offensive play as well. For our clients, again, they can't stomach a lot of that up and down, right? That choppiness is not something they're after. So we've always liked to maybe go to utilities for that alone. It's a good, stable place to put some money. But the upside here comes from the AI play. Again, what does AI need more than demand? It needs power. If it doesn't have power to run these data centers, it's going to be hard for AI to do what we hope it to do. So AI and power go hand in hand. In my opinion, you get in front of that story, you get in front of the power story, the need for power with AI, go to utilities. It's a good place for you to put money to work.
I got less than 30 seconds left before we let you go. Anything else that's on your radar? The questions you're most frequently getting from clients as we head into 2026?
Sure. There's this idea that, optimism is being put to bed and it's all pessimistic out there. The news media likes to drum the beat of pessimism. I would say stay with the plan. Know that there are opportunities right now to make money in this market. Go to work, put money to work. Scared money doesn't make money. We've all heard that. At the end of the day, you don't have to risk a ton of money if you buy these household names, global brands that are on sale right now. It's a Black Friday sale that's likely not going to last throughout the end of the year. Go to work today, look for opportunities, be ready to buy tomorrow.
Scared money doesn't make money. The great Dale Smothers, President and CEO at RDS. Well, thanks for being here as always.
Thanks
We'll
for having
talk
us,
to you
Shady.
again soon. Folks, in other news this morning at the New York Stock Exchange, SEC Chairman Paul Atkins, the one and only, rang the opening bell ahead of delivering a keynote address upstairs in the iconic boardroom. All this ahead of the United States of America's 250th anniversary. Atkins shared his vision for the future of U.S. capital markets and also reflected on the key principles that have driven the world's most dynamic economy. Take a look.
Well, thank you very much for having me here at the New York Stock Exchange. Paul Atkins, I'm chairman of the Securities and Exchange Commission, and here in New York to talk about the capital markets and directly about making IPOs great again. And we're out to make things better for people to be proud to be public and to be a listed company.
Welcome back to the broadcast. You're watching Taking Stock live from the iconic trading floor of the New York Stock Exchange. Time now for what is always my favorite part of the broadcast, not just talking with amazing guests, but especially a guest who just rang the iconic closing bell. Say hello to Angela Williams. She is president and CEO at United Way. What an incredible group, an incredible bell today. Thank you for joining us.
Oh, JD, this has been an honor and a privilege.
Especially for Giving Tuesday,
Yes.
the work which is so important to you, the entire community here for the holiday season. Can I
Yes.
start first and foremost? Can I get your perspective on ringing the bell here at the NYSE today?
This is an incredible experience. It will go down in my memory banks as the most incredible opportunity to be able to share with the world about United Way on Giving Tuesday.
What do you most want people to know about the core values surrounding Giving Tuesday and things someone watching the broadcast should know if they're a bit unfamiliar, Angela?
Well, Giving Tuesday is all about giving to others. It's about showing generosity, caring about your neighbors. We cannot forget that people are in need, whether they are in mental health crisis, whether they need housing, food, you can't pay their rent. But we can, as communities, come together to lend a helping hand to say, what can we do to make sure that everyone in our communities can thrive?
What do those actionable kind of calls to action or follow-up actually look like to strengthen so many of these communities that need, not just all time of year, but especially here for the heart of the holiday season?
Going into the holiday season, don't forget to just check on your neighbor. Look at websites such as unitedway.org, and you can click on links to learn how to volunteer, or you can donate. I tell you, there's nothing better than giving your time, your talent, or your treasure to nonprofits.
And these are things we need to remember all year, but in a special way for the holidays. If you don't mind me asking you personally, what is most rewarding about the work that you get to do with United Way?
What's so rewarding about working with United Way is that we are there before, during, and after crisis. Whether it's a person's individual crisis, a family, or a community. We stand ready to pick up the phone and help if they call 211. We are there if they call our numbers or look on our website and say, we need help. That's what's so moving. We care about our neighbors. We exhibit generosity, and I am so proud of my colleagues and our volunteers and our donors, all of whom are in the millions that work alongside us day in and day out.
And I wonder what the business case is for investing in community resilience, given the fact that, of course, we are here on the backdrop of the global financial markets. What does that mean through the lens of business and the work you do with United Way?
We have more than 50,000 corporate partners that work alongside us. And what's so special is that they recognize that they can give to nonprofits like United Way. They can enable their employees to give. And then what's important for corporations to remember is that they are made up of human beings. People come to work with their own trials and tribulations. And so they should care that the communities in which they operate are thriving communities. Because that's where they draw their employees from.
Absolutely. Angela, without a doubt, we got a lot of people watching this broadcast right now, and they want to know, what could I do to better get involved, especially for the holidays? Where do you advise people start?
I advise people to go to United Way's website. That's unitedway.org.
Angela Williams, President and CEO at United Way, congratulations on ringing the closing bell with us today, and thank you for all the work you're doing for the holidays.
Thanks for having me.
It's really great to have you. Folks, don't go anywhere. After a quick break, the latest from Money 2020's Chief Strategy Officer, Scarlett Sieber. Much more Taking Stock coming up after this.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money. Today we're going to be diving into Block, the company that turned a tiny white card reader into a global fintech empire. From your local coffee shop to your crypto wallet, Block has been everywhere. But how did a scrappy payment startup become a super app for money? Let's break it down. Remember when taking card payments meant buying a clunky terminal and praying that it worked? Then Jack Dorsey said, what if we make this cute and swipey? Enter Square, the OG fintech glow up. Picture it, 2009, San Francisco. Jack Dorsey and Jim McKelvey are watching small businesses lose sales because they can't take cards. They build a tiny reader, plug it into your phone, and boom, your local coffee shop becomes a fintech pioneer. And we all know I like my espresso, so I appreciate that. But Block didn't stop at swipes. They went full ecosystem. Cash app, Bitcoin trading, Afterpay acquisition. Suddenly, Block isn't just helping baristas, it's helping you buy crypto in your pajamas at 2 o'clock in the morning. And don't tell me you don't do it, because I know you do. Here's how Block makes money. Number one, transaction fees. Every time you swipe, tap, or dip, Block takes a cut. Merchants pay about 2.6% plus 10 cents per transaction. Then the Cash App revenue. Peer-to-peer payments are cute, but the real money is in instant transfers, Bitcoin trading, and Cash App card interchange. Of course, Afterpay BNPL. Block by Afterpay for $29 billion. Why? Merchant fees and consumer interest on late payments. That's why. Oh yeah, hardware sales. Those sleek terminals, they're not free. Hardware is a revenue stream as well, even if the margins are a bit thin. Subscription and SaaS. Payroll, invoicing, analytics. Block charges businesses monthly for the full suite. Block went from helping small businesses to building a super app. Payments, banking, crypto. It's giving the full fintech Voltron vibes up in here. Block story proves payments are just the gateway drug. Own the checkout and suddenly you own the entire fintech flow. That's not just fintech, that's empire building with the side of Bitcoin sliced in there. And that is Block broken down for you. Back over to you.
Welcome back to the broadcast. With our remaining minute, we'll get you quickly updated on the top line stories here on Wall Street for the second trading day of the week and the second trading day for the month of December. The S&P 500 finishing in positive territory, 0.25%. The Dow Jones Industrial Average up, let's call it 0.4. Small caps down fractionally on the day. We did see Boeing, Caterpillar, and Honeywell as the strongest performing names today here on Wall Street, at least in the Dow, with the laggards being Coca-Cola, Procter & Gamble, and Chevron. A little bit of downward pressure on the key energy names. Tomorrow, we actually have a pretty big slate of impressive earnings. We've got Dollar Tree report in the mornings. We'll get a sense on the retail and consumer side of things when Macy's reports before the bell and after the bell. This time tomorrow, we'll hear from some of the key AI names, Salesforce, Snowflake, and we'll also talk with Five and Below. We'll get a sense on what they've got for the consumer. 9 a.m. tomorrow morning, NYSE TV Live and FinTech TV Live, both here at the NYSE, counting you down to the open. That's going to do it for Taking Stock, and we will see you tomorrow. Woo!